What's up, everybody? It is Thursday. What's today? The 19th, November 19th. So it looks like from the comments on my video yesterday that a lot of you don't agree with me that Trump is going to bomb Iran. All right, we'll just have to wait and see. I think he's dying to do it. Anyway, let's talk about the markets. So today we had a rebound in tech stocks, and then late in the day there was some news that McConnell and Schumer, both sides in the Senate there, Dems, Democrats, and Republicans, they were getting together again to restart talks on a possible stimulus. Now the Republicans characterize this as more along the lines of, well, we're coming up to we're going to need a funding resolution by December 11th or else the government shuts down. But the Democratic side was saying that the talks were more involved with another stimulus. So we'll see. Spending is very strong. We're up 190 billion over the same time last year, and growing at about a 27% year-over-year spending rate. That's incredibly strong. One thing I did notice in the last couple of days has been a slowdown in corporation income tax flows. Now, I look at that as a barometer of economic activity, right? When economic activity is expanding, the government necessarily gets more taxes, not percentage-wise, but nominally, and vice versa. When the economy slows down, those tax flows tend to slow down. Now, corporation income tax flows are still above last year, but they look like they're taking a dip. That differential, that year-over-year differential is narrowing. Now, it could be just a couple of days, little aberration. I gotta see. Individual income tax flows, they also look a little bit like they might be rolling over a little bit. They're up year over year, but that too, I need a couple more days to check it out. On the sentiment, today we saw the AAII weekly survey. Bullish sentiment came down a bit. It's down at 44.4%. Which is still elevated. It's over the historical average. Bearish sentiment, I believe it was something like 26.4%. All right, or 20. It might have been 28.4%. 26. Yeah, it was 26.4%. That is below the historical average. So to me, bearish sentiment is a little bit too low to see an extension of the market rally right now. That doesn't mean the rally is over. It just means I think we're going to have more sideways corrective action in the short term. We got to see that bearish sentiment. I think you got to see that bearish sentiment at least get above the historical average. So we're going to bop around in here for a while. I mean, you're going to get dips. All the headline traders, something's going to pop up. They're going to sell. You want to buy those dips, and then when it rallies back up, you want to sell those rallies if you're a trader. Now, if you're looking to position yourself, to me, it still looks bullish based on those fiscal flows, which are so unbelievably powerful. So, I mean, you buy the dips and you just build a position. You build a position. But right now, I don't see it doing very much because I think we need to see bearish sentiment, get a little bit more elevated. It's too low right now. It's just too low. I want to at least see that bearish sentiment rise above the historical average. So that's it. I mean, a lot of times you just got to have patience. Like, you can't expect linear market moves all the time. I mean, you just can't expect, day after day after day of one directional market moves. I mean, I think a lot of people do expect that, and they just don't understand markets. All right? They don't understand that for a large part of the time, I mean, markets are in kind of an equilibrium. And then something busts them out of that equilibrium, whether it's up or down, you know, a new set of conditions, a new set of factors, and then you get, you know, a move to a new equilibrium price level, and then it kind of, you know, it stays there for a while. Now, I do think the underlying situation is bullish, again, based on very powerful fiscal flows. There have been no policy changes. There may be even talking about a new stimulus right now, which if that's the case, I mean, the dollar's going to fall. You're going to see gold rally. Gold is interesting, actually, because it is right down here in, you know, very strong support. And I could actually envision a scenario where we get a brief, you know, spike down, like below 1850. I bet you there's a lot of sell stops below 1850. And you got to, you know, you flush out those weak longs, and then that would be the bottom of this correction. I mean, if you look at the rise in gold prices since like last May, all right, which has been a tremendous rise. I mean, this consolidation that we're in, this pause, it's really nothing in the big picture. That's it. It's just a pause. And a very modest one, actually, you know. So, I mean, I could see a scenario where we bop down, a quick shot down to maybe, you know, below 1850, wipe out some of those sell stops. That would be the bottom. But it's another example of, you know, patience. If you're long the gold market, if you've been buying these dips, as I've been saying, with the producers down here buying, I mean, you just got to be patient. We're in a corrective phase now, you know, sort of an equilibrium now, price-wise, fundamentals. Eventually, it'll pull out of this. All right, everybody, don't forget, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. I am the only one who has an applied approach to MMT. I take the concepts and understandings of MMT, and I use them to trade and invest. And I will coach you, I will help you, mental game, it all comes along with the, you know, coming into my team. See everybody tomorrow. Bye-bye.